So in this third installment of criteria for consistency, we're going to be looking at support resistance zones, or what I call my custom kind of version of the support resistance zone. I call them SRZ zones, and they are made up in a very specific way with these four criteria that we're going to talk about. So in criteria for consistency, video number 1, we spoke about reversal candlesticks. In video number 2, we spoke about the Matryoshka effect and the power in using a higher time frame for bias and zones of action, points of control or zones of action, and then dropping down to lower time frames, whatever that may be, to then get sniper entries and get better reward for your risk. And in this third video, we're going to talk about how we come up with those zones, SRZ zones. So the first thing you need is a reversal candlestick. Go back to video 1 and I talk about the criteria for that. You capture, let's use this as an example. You capture let's take this one, for example, that I'm hovering over. Here's the criteria, the point number 1, reversal candlestick, reversal wick. So you can see this is highlighted by my ChatGPT NinjaTrader indicator. Go back to video 1 for the criteria. You highlight the shadow, the lower, in this case, the lower wick. So for zones which we're going to short off of, we're using bullish candlesticks. And for zones that we're going to go long off of, we're using bearish candlesticks. So it's support that then becomes resistance in the case of the short, or resistance that then becomes support in the case of the long. So let's look at this short example here. Number 1, reversal candlestick. We get the lower shadow of this bullish candle. Then 2, we need a retest. It needs to move away from that and come back and bounce again, and or have reversal candlesticks in that prior area, potential area that we marked out. So you can see we've got both. We've got the bounce and we've got these highlighted, because these ones that are highlighted in yellow or outlined in yellow are all bullish reversal candlesticks. So as soon as we got that, at this point here, that is a confirmed zone at that point here. Even if we didn't get that, if it bounced out of it like this, then it's a confirmed zone too. We happen to have both in this example. So number 2 is satisfied, that criterion. And then number 3, break and close. So here we do break, but we don't close because it's a wick. Comes back up, comes back down. We do break again, but we don't close. On this candle here, we close under this support zone that's going to become our resistance for a short. And that is the number 3. And then number 4, pull back to the zone, into the zone. So at any stage from this point here into this zone, and only within this zone, we're looking for shorts on the lower time frame. In the next video, we'll talk about the entry model. And then probably the 5th video, I've already planned it out, will be the way we set stops and targets based off of volatility. And the 6th and quote final end quote video of the series will be trade management. Video 7 may be account management, but that's outside of the scope of the main 6 lessons. So back to this 3rd lesson. Number 1, reversal candlestick, reversal wick. Highlight that and see, and over time you'll be able to pick these out fairly quickly if you practice. Retest, so it moves away, comes back and retests via either and or reversal candlestick and bounce. We've got that. Break and close here. Pull back to the zone. Entry model on the lower time frame. In my case, this is going to be a 1-minute entry. This is the 15-minute here. You can't see it, but it's the 15-minute of the ES. The zone is invalidated, and I didn't write this down here. Perhaps I should, and I will. The zone is invalidated on close on the other side. It's not a very eloquent way to put it, but I'll explain what I mean. Zone is invalidated on close on the other side. That means this zone is valid here. It moved away, came back in. It's still valid until this candle here, which is a close on the other side of the zone. After that, this zone disappears. And we're going to take it off here. So now let's move on to this one here. This is live here because I'm doing this at nearly 3 o'clock in the morning on Wednesday, the 13th of May. So this is live. Go back here. Shadow or wick, reversal wick. We're looking for the bullish ones if we're looking to go short off of what was once support. We're looking for it to move away, come back and retest. This candle's not good enough because it's not in the zone, even though it's a reversal candlestick. As soon as we see this candle here, that zone is valid. It didn't bounce this time, but that's fine because we got the reversal candlestick, which is kind of a bounce within the candle, if that makes any sense. And then it closes here. From this point here, this zone is active. It's not active before that close here. You can put it on before, but it's not a zone to be traded until you get this close underneath. That is criterion 3, and then 4, the pullback. So if you get reversal signals, entry models signals here, maybe they work, maybe they don't, but on the lower time frame you get your reversals in here, and as you can see, it does eventually go, and that whether you got stopped or be able to hold on to the trade is going to depend on your entry model, your stop placement, and of course your trade management. And those are going to be the next 3 videos that we're going to talk about. So let's do one. Actually, today is a very frustrating day because I've taken 2 losses and it's the end of my Wednesday, but I just missed the short off of here, off of this zone, which is still valid until such time that it closes on the other side. Let's do one more and we'll end this video because it's already 7 minutes long. Wick, bullish candle, wick, you highlight it. The next candle is a reversal candle, so it's already a reversal zone from this point here. It moves away, comes back, gives you another reversal candle, which is a bounce within the candle, closes here, and from this point here, that zone is active. You do have to filter, or you might want to filter in terms of trend, direction, and so on, but these do work well enough even if you don't filter with trend, because you're going from a higher time frame bias to a lower time frame trigger. When it closes here, you get your short signals in here, and then it doesn't look like a lot on the 15-minute chart, but if you catch it on the 1 minute, that's plenty of room to manage a trade and make 2, 3, or even 4, perhaps 5R out of this. And that's it. That's going to be it for this 3rd video. I don't want to make them too long. Subscribe, like, subscribe, follow along if you want the rest. This is going to be a 7 video, as I said, series, with the 7th video being the sort of glue that ties everything together. But the main sort of nuts and bolts of the system is going to be covered in these first 6 videos. So this is video 3. Check out video 4 when it comes along, and I'll wish you well for now. Take care and bye for now.